Hello, my name is Suji. I'm the Business Development Director for Prosper Square, which is the UK's leading rewards programme and business club for SMEs. I'd like to introduce Karen Pearson. If Karen, I can just ask you to say hello so everybody can see you.
Yes, good morning, everybody.
Yeah, so Karen Pearson heads up the team at Jackson and Green Accountants in Portsmouth, who has years of experience as a practitioner. She's actually taught accountancy and has a background in sales and marketing. We've also got Sarah Jane from Jackson and Green, who is a tax specialist and has a background with HMRC. Today, I'll be talking to Karen about tax and the implications at the end of the year. The furlough grants, and other areas SMEs ought to be thinking about at this time of the year. Sarah Jane will be looking after the chat box. So if you've got any questions, please pop them in there. Can I ask you to pop your chat box on panelists and attendees? And that means that you'll be able to see anything that anybody writes on there. So if you just go down to your bottom of your screen, find chat and go into panelists and attendees. We will be recording the webinar, so and I think with this, there's a lot of information Karen's going to share with us. So you will get a copy of the recording, and there is a handout with important websites, etc., that will come out to you. So with no further ado, let's get started. So Karen, Christmas is often a time when businesses can struggle with their cash flow. Obviously, we've had COVID-19 this year, and it's likely that companies and individuals may have problems meeting their tax liabilities in full. So who do you think is most at risk and what can they do?
Well, good morning, Sue. And hasn't it been a dreadful year? I think we all have to acknowledge that. And HMRC do as well. And I think that's really important. Normally, we've got a whole swathe of businesses who do incredibly well over the festive period. And of course, that's not likely to happen this time round. But we've also got those companies and individuals who are heading towards significant tax liabilities over the next couple of months. And it's knowing what they can do and where they can go to get help that we really are going to centre on this morning. Okay, from a limited company point of view, who are most at risk? And I suppose the ones that really spring to mind are going to be any of our businesses that have got a 31st of March year end. Now, companies always pay their corporation tax 9 months and 1 day after the end of what we call the accounting reference date, which is your year end. So if you're a 31st of March year end, you're heading for a Christmas tax bill. And of course, all these profits were made when times were good. We're looking at an 18-month ago period when these taxes were sort of being calculated. So it's going to come as a bit of a shock that we've now got to start paying it over. So if you've got a tax bill now because you're a 31st of March year end, or even perhaps if you're a 30th of April year end because your tax is going to be due on the 1st of February, then we need to start thinking about how you can actually perhaps spread these payments with HMRC. And I think the thing to really remember here is HMRC need and want to work with you. It's in their best interest to be flexible, to be understanding, and to try and make it as easy as possible to communicate with them. One thing we have to really get to grips with is the fact that corporation tax is not an automatically deferred tax. So if we think back to VAT back in the spring when they went, don't worry about it, you can pay your VAT later. Corporation tax is not one of those taxes. They really are relying on people paying them so that they've got enough in the coffers to be able to continue with things like furlough and all the other grants that are coming out. So bearing in mind they've got to be paid, what can you do to try and spread it over? Now, if you don't know, HMRC have already set up a dedicated COVID helpline. And when the actual handout comes out later, you'll have that 0800 number blazoned right across the top of it. And it doesn't matter which tax you're talking about, you can talk to them on there. But let's face it, that's going to be a very, very heavily subscribed helpline. So there are other places that you can go to. I think the first thing with the corporation tax is always pay what you can. So if your tax bill is due on the 1st of January, make that payment. Now, your accountants will have all have told you what your reference numbers are, what you've got to pay, how you pay it. So if you've got a tax bill of 20,000 and you know you can put 5k in, do it before you even try and contact HMRC, because it's like anything. If you're shown willing, then they're going to be an awful lot more lenient with you. So make that payment before Christmas, and then make the telephone call. You can't actually do this one online. It really does have to be a face-to-face, telephone call conversation. So when you're calling them, have a plan. Now, they quite readily will spread your payments over 6, 12 months in a lot of circumstances, but they want you to tell them what's affordable to you. They want you to tell them that you have robbed granny's piggy bank, literally, but you're going to pay this amount of money on this amount of date. And really importantly, you're prepared to pay it by direct debit, because that's showing commitment to them. And if you meet those criteria, even if you've had a time to pay arrangement before, I'm guessing that in the current climate, HMRC are going to be supportive of that, are going to allow you to, to spread things over. So don't stick your head in the sand, make those conversations, get the first payment in, and be very forthright with them as to what you can actually do. And so honestly, I believe we're going to get away with much longer payment time to pay arrangements than we've had in the past. So that's the corporation tax. That will be all the company taxes that are due. The other one, of course, is going to affect any of us who've got a personal tax liability and we fill in a tax return. And of course, our personal taxes are due at the end of January. Most of us deferred our payment on account from July. So if you were due to make your payments last summer and didn't, you got a double whammy coming up now. You've got your payment on account, you've got your final payment, and potentially you've got that first payment on account for the next tax year. And if you've never been in payment on accounts before, that's 150% of last year's tax bill. Again, your accountant will have told you all about it. It shouldn't be a surprise, but if it is, you need to pick up the phone and talk to them so that you understand why you're in the situation that you're in. Now, HMRC do not have enough people on helplines to talk to all of us. Physically can't happen. So what they really want you to be doing is to be setting up a time to pay arrangement online using your personal tax account. Now, I have to say, the one good thing that actually came out of COVID is that to be able to access a lot of their self-employed grants, you had to have a new personal tax account. So you've got the tools in place, you just have to log back into your government gateway, and you'll then be able to apply for a time to pay arrangement online. Now, it's very straightforward. If you've got a tax bill which is less than 30,000, which is going to be the majority of us, let's face it, if you are prepared to pay on direct debit, again, it's a real stickler for HMRC. You can go on and you can actually set the payments, and there'll be equal payments up to 11 months. Now, for most people, being able to spread it 11 months is going to just sort them out. But what I would say to you is try not to get it beyond the July payment on account, because otherwise you're never going to catch up. So have a little think. Again, pay what you can in advance and then go online and do it. Yes, of course, HMRC are still going to talk to you, but we know from experience that the December, January period, when anyone's trying to get hold of HMRC, is always going to be a very, very tricky time because they just don't have enough people. So try and self-help, go onto their websites, use your personal tax accounts, and apply for those payment systems. So
great, thank you, Karen. I think the bottom line of that is don't put your head in the sand.
Oh, absolutely. And I can't stress enough that HMRC want to work with you. What they don't like is they don't like people ignoring them. And actually, one thing to remind everybody, if you're already in arrears and you are already being monitored and managed by a third-party debt collection agency because HMRC have sold your debt on, you can't go back to HMRC to discuss that debt. You've got to go to Advantis or whoever it is the debt has been sold to. But if these are brand new tax liabilities that are due now, you can do all those things that I've just said. And the links and the telephone numbers and all the information are going to be on those handouts that you're sending out soon.
Brilliant. Thanks very much, Karen. Okay, let's move on to furlough and grants from this year.
Mm-hmm.
Many businesses, as we know, are benefiting from the furlough and rate grants that have been made available. Mm-hmm. The first question has to be, are these taxable, and is there any opportunity to defer the PAYE or NI liabilities that have been paid to staff on salaries? I think that lots of people really don't understand what the implication is. So over to you.
let's talk about HMRC giving you money. There is no such thing as a free lunch. If they're going to give you something, they're going to tax you on it at the back end. So think about all those rates grants that you've got, all the furlough payments that you've had. They have been extremely important in keeping businesses going. But if you make a profit in the trading period, then it counts the same as normal trading income would be, and HMRC will tax you at your prevailing rate. So if you're a company, you can look at losing 19% of it. If you're a sole trader or if you're a partnership, you're going to be taxed at your prevailing rate. So you might be a 20% taxpayer, you might be a 40% taxpayer, and then of course you've got national insurance on top of it. So one thing I'm forever backing on about to my poor old clients is the fact that when you get a grant, put part of it aside, because it's going to go back from where it came eventually. Thinking about things like PAYE and construction industry, which is part of the PAYE system. Again, it's a bit like corporation tax. You don't have any automatic deferral on that. So HMRC are looking to collect because they are using these taxes that they're receiving in to be able to then push it back out again as the grants. So exactly the same process applies. If you can't pay, in these instances, actually, again, you have to pick up the telephone. There's no online application for it. And the telephone numbers, Sue, for their payment support lines are all in the pack that you're sending out.
Brilliant, thank you.
Please do remember, and I tell you what, this is really for the self-employment guys, because of course they've been getting some fantastic payouts, and trying to sort of calculate it back, there's going to be some of my clients that are going to get more than 20, perhaps £25,000 worth of sole trader grants by the end of March. And they are going to really suffer if they haven't started to put some of those away. And of course, the other thing to think about is it might push you into another tax bracket. So if you've been a 20% taxpayer all this time, and because of the grants, it nudges you into 40%, you've lost even more of that grant coming through. And then they're going to lock on the national insurance onto it, which means even more of it has to go back. So I think keep an eye on the maths. Also keep an eye on, should I be taking these grants? HMRC have really changed their stance in the past week or so. Sarah Jane was putting through a furlough claim yesterday for one of our clients, and there was a pop-up box which we've never seen before, which basically said, right, from now on, we're going to be broadcasting who's taking the furlough grant, which businesses are doing it, and if you've got employees who you are claiming furlough for, they'll be able to see that in their personal tax accounts. So I think HMRC are trying to make sure that you're not overclaiming. One thing that we have seen a lot more of is emails coming through from HMRC saying, look, do encourage your clients to get in contact with us if they think they've overclaimed or if they've been paid the wrong amount. This is part of the normal penalty regime. So HMRC will, at some point in time, try and recover some of this if they think it's been paid incorrectly. At the moment, you can hand it back, no questions asked. But if this carries on and HMRC decide that you are a person of interest and they decide that, yeah, you were claiming stuff that you shouldn't have been claiming, yes, they'll want that money back, but they'll also want it back with a penalty. And the maximum penalty that they can levy is 100% of what they gave you in the first place. Now, if you're struggling, that would be it'd be a disaster, wouldn't it? Let's face it. So think long and hard before you actually start or continue claiming, particularly the furlough and the self-employment income support scheme.
Okay, Karen, yeah, really interesting. I think that partly with COVID and, the circumstances everybody's been with is we've just looked at that payments that they needed to come out, but really not the implication. And again, it's back to, don't put your head in the sand. If you've got questions, go to HMRC. Just a small note, I can see that there are some questions coming through on the chat line, which Sarah Jane is fielding and answering. We will open up for questions again later if you want to, but thank you for that, Sarah Jane. So let me move on, Karen, to our next topic. The self-employed are in the process of applying for their third grant, and another one will be available if they need it for 3 months, covering February to April. Some individuals will have received, in excess of £20,000. How does this impact on their 5th of April tax bill? Is that
I got ahead of myself, didn't I?
That was linking back to what you were talking about. Yeah.
Yeah, I think, that the main thing is just keep a watchful eye on your total amounts of income and profits, because you might just nip into another level without realising it. And actually, a good point on that, Sue, is also VAT. Now, HMRC have said that if for any reason your total income, because you've had some of these grants, tips you above 85,000, which is the VAT threshold, they won't expect you to be registering, because that money isn't trading income, it's other income, and it's only trading income that actually qualifies against the VAT threshold. So that's been a very common question recently, but people can sleep at night over that. You're not going to be chucked into that.
That is really good information. And funny enough, I'm going to come on to VAT next, actually. Yeah, as if you know what I'm going to say, Karen. Yeah. So what's going to happen, if I defer my VAT bills from last spring? Yeah. Can I defer them again? Where does that sit?
Yeah, cash flow for that, they're trying very, very hard to try and work with all of the VAT registered clients. So if you were in a situation where you couldn't pay your spring VAT bill and you decided that you were going to tag it on to sort of March next year, which was the expectation, then HMRC have gone, look, we completely understand. We perhaps were being a little bit over optimistic. We don't think you're all going to be able to meet it. Now, if you can pay your deferred VAT bill off by March, fab. There's been no interest added to it. They've been very, very flexible, very, very understanding. But if you're struggling with your corporation tax and your personal tax, and the VAT is literally going to tip you over the edge, they said, look, okay, you can apply for an extended period, take it another 12 months, and providing it's paid off by 2022 March, then they're not going to create. And that is something that's going to be opened up probably just after Christmas. We haven't had any definite dates yet. You can't do anything about it at the moment. No information whatsoever has come out. Keep an eye on it. You can only apply online. So if your accountant manages all your VAT and you don't have an online portal for your VAT, you need to start talking to your accountants. They'll help you set one up, because they can't actually apply for this for you. It's something that you have to do. And there are sort of terms and conditions definitely apply on this one. You have to make sure all your VAT returns are up to date. They don't want any gaps anywhere in the last 4 years. They want to make sure that ordinarily you're running your VAT, well, that there aren't too many problems with payments and such like. But if you're just the average Joe who has had a really shit year, then they're there to help you on this one. So keep an eye. Your accountants will be telling you when you can start applying for this. Certainly my clients have been bombarded with emails, whether they like it or not, on stuff that's actually coming up. So we'll tell everybody when it's coming through, and when it's there, do make sure you apply. Again, you're going to spread it over equal payments, and providing it's all done and dusted by March 22, no fees, Sue. I think that is actually quite exceptional from HMRC, because they never do something like that.
Yeah, and I think it's possibly a point that says that, as you say, from Jackson and Green, you're ensuring that your clients are fully aware of these things. I would say to people, if they're not hearing from their accountants, maybe giving them some advice, maybe they ought to pick up the responsibility and be asking those questions of their accountant.
Yeah, definitely. Because, at the end of the day, HMRC will say that you're the taxpayer, you're the one who's liable. And although your accountant is there to guide you, you have to take responsibility for it. But, I'd always say, look, at the end of the day, this is a partnership between you and your accountant. Pick up the telephone, find out what advice they can give you, which is specific to you.
Brilliant. Excellent. Okay, let's go on to bounce back and business interruption loans.
Oh.
Yeah, I have all the best subjects. Yeah. Bounce back loans. Yeah, they've been a lifesaver for many businesses. Yeah. What are the terms on these loans, and can business owners use money for their own personal use?
I've got a real bugbear on these. I really have. They are fantastic. I think for any company, business, whoever you might be, everyone's been allowed to get these bank back loans. And if you're large enough, you've been able to get the C-bills as well. In the spirit they were intended, they have been an absolute lifesaver. And that spirit for intention is to be used within the business to make sure that you can pay your wages, that you can pay your rent, that you can buy your stock, pay your suppliers. It is not there for the directors to decide, oh, I'll pay a bit of my mortgage off, or I can pay for my daughter's wedding, or I can do this and I can do that. If you are actually owed a lot of money through your business and your director's loan account is in credit, and they'll know if they are, then that's absolutely fine, because it gives you the ability to get some money out which is owed to you anyway. But if you're not owed money by your business and you're taking money which effectively hasn't been made by profit, then HMRC will go, well, hang on a minute, you've actually now disadvantaged your business because you've taken out the working capital that was there to be able to support your business in moving forward. So when it gets to corporation tax time, you might find that you've got to pay an extra 32.5% of what you've taken out that you can't pay back. So what started off as a very generous 2.5% loan might end up as a 32.5% extra tax charge. I really don't want that. So again, if you think, oh God, that was me, please talk to your accountant, start thinking about ways that we can mitigate this, because it will come back and bite you at the year end after it actually happened. And yes, Sue, that's going to hit swathes of people who had no understanding of what they were walking into.
Yeah, and I think that again, you know, really one of the reasons of putting this webinar on is to try to get people to really understand some of the detail that was never really explained in the first place.
No.
So
let's face it, you know, HMRC, they're desperately trying to get some money back. So if they can dupe you into doing something that you weren't expecting, well, hey ho.
Yeah. Okay, construction industry scheme, reverse charge VAT.
Right, okay.
Why is it going to have such an impact?
So this is another thing that could impact on cash flow, and let's sort of take this back and think about what's actually happening here. So from the 1st of March, if you operate within the construction industry, and you will know if you do, and if you've never heard of this, don't worry, it doesn't apply to you. But HMRC are going to stop the flow of VAT within the various different cogs of the wheel. So if we sort of come back and think, where has this come from? If you imagine all those companies that constantly reinvent themselves, open up as a new company, register themselves for VAT, charge VAT on invoices, collect that VAT, and before they've had a chance to pay it over to HMRC or pay their year-end taxes, they've gone. And then they start up as something else. And HMRC have had enough. They are losing millions year in year in VAT that never gets handed over to the Treasury. So what they've decided to do is to set up a reverse charge scale system, which effectively means if you are within CIS, you don't charge VAT and you don't claim it back until the very last person working for Mrs. Smith at the end actually charges her VAT, because VAT is a tax on the final consumer. Nobody else actually pays VAT because they can claim it back from HMRC all the while. So if you've got subby here working for contractor, and then contractor is working for Mrs. Smith, if this subby is VAT registered, normally he would charge the contractor the cost of their labour materials plus VAT on it. From now, they're not going to do it. Now, this is where the cash flow bit comes in, because of course, if he's charged VAT, he's going to pay that over. And then our little subby here has got the VAT during the course of those 3 months that they can use as working capital before they then have to hand it over to HMRC. They're not going to have that. So a lot of the income that they've been relying on for years and years and they're used to having is going to disappear from the 1st of March. So they're going to have to start thinking about how they're going to restructure themselves so they have got enough working capital really for the first 6 months. After then, I think it will all start to sort of fall into place and will calm down a bit. But up to that point, they're going to struggle. One thing I would suggest is look at potentially going to monthly VAT returns. That could help because, of course, they're now more likely to be in a repayment situation on a monthly basis because they can still claim back the VAT on all the things that they bought, but they're not going to have to pay anything over to HMRC. So again, talk to your accountants, see if it's something that you should be doing, and then start getting those applications in.
Yeah, brilliant. I have to say it was a piece of advice I gave to a plumbing firm about doing monthly VAT returns for the amount of VAT that they were having to pay out prior to getting it. Okay, let's have a little chat about, we've got 5 minutes left. Let's have a little chat about tax on the disposal of buy-to-let properties. Yeah, what are the changes? Why is it going to impact cash flow, etc.?
Okay, so again, HMRC are desperate to try and collect taxes when they're due, so that at a later date, you've actually had them paid and you haven't run out of cash by the time something's actually due later. So historically, if you had a buy-to-let property and you sold it, then you would make a declaration on your annual tax return, and then the January later, along with all your other taxes, you would just pay the capital gain on that, which is fine, but it might be 20 months since you sold that property. Now, you tell me, is everyone going to have the money that they need, say, 20 months later? Possibly not. Other things have happened in life since then, haven't they? Yeah. So again, because HMRC realised they've got to get things turned around quicker, from the 6th of April this year, if you've got a buy-to-let and you've sold it, you've got 30 days to fill in the paperwork, get it off to HMRC and get that tax paid. Now, for most people, they'll go, actually, I'm really pleased with that because it means then it's done and dusted. I don't have to think about it at a later date. But if you were planning on using that money as cash flow for something else, thinking, well, okay, that will then generate income later, by the time my January tax bill comes around, I can then pay it, that's all gone. So again, you have to start thinking about what you're doing. And a plea from accountants would be, we've only got 30 days to set up your portal, get the paperwork in, get it sorted. If you're planning on selling something, talk to your accountant in advance.
Brilliant. And before we close, we open up for questions, I have got to mention the word Brexit. Yeah. And what's happening on the 31st of December? What should our VAT registered businesses be doing now to ensure that they're ready?
It's so hard, isn't it? Because the crystal ball just isn't working. We still don't have a deal. What I have done on the handout that's coming out is I've put some really useful links on there. I think the most important thing is make sure that you're appointing an agent. You don't want to be trying to navigate bringing goods into the UK or exporting them for the time being until everything's settled down and everyone knows what they're doing. So there's some really good, useful links there. But I think the one thing I'd like to draw your attention to is that there is a link on there for what they call the transition questionnaire. So gov.uk have got a really good web page set up whereby you answer X number of questions as a person, an individual, a business owner, a parent, and it will talk you through the sorts of things that you should be mindful of, not just the VAT, but everything else that's happening for Brexit, and will signpost you along the way. So if you haven't taken their transition questionnaire, do it over Christmas. Make sure that you know what you're doing. If you are already in VAT, do it today because it could be something on there that you need. And if you don't have an agent set up, then make sure that you appoint one very quickly.
Excellent. Thank you very much. Well, actually, I'm not certain. My head's not hurting now. Yeah, there's a lot. And I've been seeing the questions come through the chat box. So I'm just going to pick up because I think Sarah Jane's answered most of them. If anybody's got anything that they would have immediately like to put to Karen, then if you just want to pop that in the chat box now, I'll pick it up. And I've got two from Janie Bales, I think. Good morning. I know, again, I'm not certain whether Sarah Jane has picked these up. Can you talk about VAT deferral applying online? Can you get there through the gateway?
At the moment, we don't know exactly what it will look like because they haven't sort of finalised their platform yet, but you are definitely going to have a VAT portal. Now, if you do your own VAT returns and you're in Making Tax Digital at the present time, and that, of course, will be all the people over the £85,000 threshold, then you've already got a VAT portal already in place. If you haven't hit the threshold and you're not in Making Tax Digital, there's a really good chance that you might not have a portal. And if you're not at all certain how to set one up, then talk to your accountants because it's the sort of thing that we do day in, day out. So can I just say something extra on VAT and for all those people that perhaps haven't hit the VAT threshold yet? Up to now, Making Tax Digital has only been important for people who've either voluntarily subscribed to it or they've hit the 85,000 and they've been mandated by HMRC and they have to do it digitally. From next year, so we're talking April 2022, everybody who's got a VAT registration is going to have to report their VAT digitally. Now, this might come as a bit of a shock, because if you are a shoebox person and all your receipts go in there and you keep all your records manually, you're going to have to do it digitally. Now, in the broader sense, that means having something like QuickBooks, Sage, Xero, and the rest of them, or have your accountant change your Excel spreadsheets into a digital format that they can push through to HMRC. But again, if you've not had those conversations with your accountant, pick up the telephone and make sure that you understand what's coming your way.
Okay. Is there anything else? I can't see any questions on there that Sarah Jane's not answered, actually. So is there any final hints or tips that you want to give across any of the subject, Karen, before
I think, yeah, the most important thing is, we know this is a tough year. HMRC know that you're not necessarily going to be able to pay all your taxes in full, but do not ignore the fact that those liabilities are your liabilities and they have to be addressed. Now, either you address them by paying them in full, or you go to HMRC cap in hand with a time to pay. And I honestly believe that you're going to find it a lot less stressful than you think it is. For anyone who's in personal tax and they're not used to talking to HMRC, and your accountant usually does everything for you, then there is nothing wrong with being with your accountant in their office and the two of you making those phone calls together. And you know what? We do it for our personal tax clients all the time, and we also do it for the other taxes, because quite rightly, we can probably get a longer time to pay arrangement under normal circumstances than people who are not used to talking to HMRC. So, you know, get that dialogue going between you and your accountants, and use them. That's what we're there for. You know, we're there to support you through the difficult times. So, you know, if you need us to hold your hand, you know, calling HMRC, then make sure that we do.
Excellent. Well, thank you very much, Karen. That was really, really informative. And for me too. Yeah, I've been learning things as the host as well as those people attending. If I can just clarify with everybody, this recording will be sent out to you for those that have attended. There is really a very helpful information sheet that will come out too. On behalf of Prosper Square, I would like to thank Karen and Sarah Jane for their expertise and their time in this. Also, we do have another webinar coming out in January, which will be around motivating people, etc. And we will send you an invite from there. So all I can say is thank you very much. I think it's late enough in the year for me to say I wish you all a very Merry Christmas. And we look forward to seeing you on a webinar in the near future.